Hey all, welcome back again to the pre-market report by Invesfinc. In today's video, we will share the outlook on Nifty, Sensex, Banknifty and FINNIFTY for 2nd June 2025. In addition to this, we will also be sharing the trending stocks from Friday's trade. So stick with us until the end of the video. Before we jump onto the details, please go through the disclaimer. Now let's begin with the analysis on the indices. So this is the chart of Nifty 50. So as we have been seeing that the markets have been overall consolidating for almost past 3 trading sessions. So each time we approach towards 24,000, 25,000 or 25,200 odd levels, we have been seeing a significant pressure, and that is leading to sell on the rise on Nifty index. Now in fact yesterday we saw a drop of overall 82 points, 0.33% on Nifty. So as long as we start the crossover above this particular level of 25,000 odd, then that would act as a significant buying interest. So that buying interest would lead to crossing the previous resistance what we have towards 25,150 odd levels. Now until we do not cross 24,850 to 24,900 on a decisive level, then it is difficult for us to cross beyond 25,000 at least. So in our previous video also we discussed that Nifty has to stay for at least 2 trading sessions above 24,900 odd levels. Now if that sustains positively for 2 days, then it would build a good strength, and then from there we could see a rise further coming back. Now the trigger for us should be, for almost like 4 trading sessions we have approached 24,750 odd levels, and despite we trying to move above towards 24,900 odd levels, some kind of selling pressure is evidently seen, and that is when we have not been able to cross those levels. Now we have approached towards the lowest zone of this particular channel, this box. If on Monday we see with good volumes the selling pressure comes in, then we are headed towards 24,600 to 24,500 odd levels in the near term, and then we would hover in this zone for some time. If further the bullishness doesn't appear in this channel, then we are headed towards a downfall, which could lead to further opening around 24,300 odd levels in the near term. So the immediate support for us would be 24,600 odd, and on the higher side the resistance would be 24,900. Now let's see from open interest. So there emerges some support or buying at the lower levels around 24,400, 500 and even at 24,000 900 odd levels. So on the higher side, if you see from the call side, we have been seeing a lot of call additions that are getting added, so which would add to a lot of pressure on Nifty. So if you see the channel what we have been talking about, 24,800 to 900 odd levels, this is the zone we have a significant open interest built up that has happened. So at 25,000 levels, 24,800 and then at 24,900 levels too. So this would act as a stiff resistance for Nifty in the near term. Once we decisively close or stand still at this particular zone, then that would act as a strong support, and then from there on we could break 25,000 odd levels and approach towards the another resistance of 25,600 odd. So till then we are going to trade in a narrow range of 24,600 as the immediate support from the put writers, and on the higher side around 24,900 odd levels. On PCR front, it is 0.6, which is not quite bullish, and at the money it is 0.68, which is slightly positive. Now moving on to Sensex. So Sensex has given a kind of indecisive or doji candle. Now until and unless we cross beyond this 81,700 odd levels, we cannot assume any positivity on the long side to appear. So we on Friday have dropped 182 points on Sensex, and point that translated to 0.22% fall. So we are again at the lower channel even on Sensex. So as long as this channel sustains, there is no much worry. But immediately if we see this channel getting broken, then we are headed towards 80,500 odd levels. So which is just 1000 or 950 points away from this particular zone. On the higher side, immediately we will have to cross 81,800 odd levels and sustain there for at least 2 to 3 trading sessions. And if we start trading above that zone 81,800 odd, then it opens up for the further leg of up move, which is around 82,800 odd levels, from where we had seen that down move coming in. Now that would act as the significant resistance for us. Once we break that particular channel, then we will be headed towards 84,000 odd levels. So we are going to trade in a tight range on Monday. If we are unable to close above 81,500 on Monday, then we could see a sell-off coming in on Tuesday, which would be the expiry day, and that would be a quite volatile session. Now moving on to open interest. So since as we have told that on the charts it seems to be like we are heading towards a stiff kind of zone. Now if you see, there have been lot of both put writing as well as call writing only at one particular strike, 81,500. So this acts as a both strong support as well as resistance. So as long as we do not cross this particular level, there is no further up move that we can expect. Similarly, once there comes a selling pressure towards or below 81,500 on a decisive note, so this was just 50 points down. So we have to see how maybe for another 1-2 trading session it would be. So if further we see it gets closed below 81,500 odd, then that would act as a strong resistance for us, and then we should only take trades either in the range of 81,800 or below 81,500. So this would be the overall zone for us, 81,000 levels until 81,800 odd. So in this zone we would be trading 800 points. If we see tomorrow itself there is a drop of 200 to 300 odd points, then we are headed to open until 80,500 odd levels on the expiry day. So this would be the overall channel for us for tomorrow and then on Tuesday's trade. On the PCR front as well, we see 0.6, which is not at all bullish, and at the money it is 0.7, which is little positive. Moving on to Banknifty. The banking stocks, however, had shown some strength and it had recovered from the lows. So we are back to the previous high channel from where we had seen this underperformance coming in. So as you could see, for almost 1, 2, 3, 4 trading sessions, we have touched this particular zone. Now this would be time the Bank Nifty would react and there would be a breakout that is very evidently seen on the charts. So we are just roughly around 250 points away from the 200 to be precise, away from the 52-week high. So the expectations are that Bank Nifty would give a decisive breakout above this particular zone and head towards 56,500 as the primary or first level, and then on top of that we would be seeing Bank Nifty could move until 57,500 in this particular June expiry. So Bank Nifty is very clearly seeing bullish on the charts. So keep this particular box. Once you see breakout happening, just go on longs on Bank Nifty. Now let's see from the perspective of open interest. So at 56,000 odd levels, we see a strong resistance on the Bank Nifty. However, with the kind of positivity that we are seeing on the charts, the expectations are that we might break out 56,000 levels with a decisive bullishness. So that is when you would be seeing that on the call side there have been no high open interest additions that have got done compared to when you look on the put side. So it's very evident and clear that we are headed on the long side on Bank Nifty. So at the PCR also, if you see, it is trading at 1, which is quite bullish, and at the money it is 0.97. Even that translates to bullish tone on Bank Nifty. Now lastly on FINNIFTY from the perspective of index analysis. So even FINNIFTY, because it is again the composite of the financial services and insurance stocks, so we have been seeing along with Bank Nifty some positivity has already emerged even on the financial services sectors or the stocks. So we are headed towards breaking that channel on the higher side, and we are again on FINNIFTY as well, just 400 to 500 points away the 52-week high. So Nifty Sensex still do not show that positivity. However, the next leg of up move on these major indices would come typically from the banking stocks and the financial services stocks. So be ready for the up move that is expected to come in on the FINNIFTY and banking stocks. Now, once we cross 26,600 levels for 1 or 2 trading day sessions, be ready for a breakout to happen above 26,800 odd levels, and this would lead to 27,500 on the higher side and approaching even towards 28,000 levels in the June expiry. So looking at the charts, it seems to be positive on FINNIFTY too. Now let's see from the perspective of open interest. So as you could see, it's very evident that the traders have also placed their bets similarly. So you could see strangle kind of positions have been built. So on the lower side it is 25,500, which is considered as a support or break low, and then on the higher side 27,500 highest open interest positions is seen here on the Friday's trading session. So it's very clear that everyone is anticipating that FINNIFTY would break out about 26,500 odd levels on a decisive note. Until then, we do not have any resistance. The first resistance, significant resistance in fact, is only available at 27,500 odd levels. And the anticipation is, if we approach positively and move to 27,500 odd levels in just maybe a day or 2 days trading session, then there are high probabilities that even we can cross 28,000 odd levels. So let's not quickly jump and short 27,500 strike. So once we further move up, we could see some built up positions also getting added on 28,000 odd levels, which we may not be able to see now, but yes, you can see the overall option chain. In that you could clearly see that till what strike we could see the highest open interest build-ups that have happened. So as of now it's a wait and watch approach, but the trades have to be only taken on a long side on FINNIFTY as well as on Bank Nifty. So from the PCR front, it is 1.2 overall, which is quite positive, and 0.9 at the money. This is majorly because of these particular positions that have been opened on 26,500 strike. So overall FINNIFTY also shows positivity. Now comes our interesting segment, the FII and DII participation along with the retailers. Now if you see on the index futures, the FIIs have been decisively adding their positions towards short. So we could see further around 6,000 positions or contracts have been added, and the overall shorts now is 83,684 contracts. On index options, net FIIs are short by 37,000 odd contracts. They are long on call options, and they have also built long positions on put options. That means they are not positive at all on the index options. That is when shorts have been continued. Now moving on to proprietary traders. Proprietary traders have mild positions on index futures. They are again short by 13,163 contracts. On index options also proprietary traders have been short, but again mild positions of 14,062 contracts. So net, if you see, on call options they are long by 1.05 lakh contracts, and on put options they have hedged and gone again long by 1.19 lakh contracts. That translates to a overall short position of 14,000 contracts. Client or retailers on the other hand have been on a long side on index futures and added roughly around 4,000 odd contracts and are holding now 61,790 positions on long on index futures. On index options, on call options, they are short decisively by 2.37 lakh contracts, and on put options again they have hedged by adding shorts of 2.99 lakh contracts, which translates to overall longs of 62,000 odd contracts. So there is a kind of contradict behavior between the institutions and the retailers. So institutions, both proprietary traders and FIIs, are going heavy short, and clients on the other hand have been going long. So time will only tell that who is going to win on their positions. Now the last segment to this is the cash market investments. Now DIIs on the cash market have significantly taken 9,096 crore of positions in the cash market. However, FIIs on the other hand have sold 6,450 crores in the cash market or equities. So one institution is short, another institution is supporting and going long. So as long as the net buying is there from either of the institutions, we need not too much worry, and there would not be a panic selling that would come in. So overall, we might consolidate at this range. When we see both the institutions going short, then we have to remain cautious, and then we would sulk at least 1 to 2% from the current zone. Now the last segment is the trending stocks. So the first up is BSE. The shares of BSE Limited had jumped with an impressive 8.5% on Friday. So the primary catalyst for this sharp rally was the capital markets regulator SEBI's approval for the exchange to divest its entire stake in its joint venture, Asia Index Private Limited. So BSE will sell its complete 25% stake in AIPL to S&P Dow Jones Indices LLC, which is its partner in the joint venture. So the deal is valued at approximately 309 crores, which provides a substantial cash flow for the exchange. So this divestment allows BSE to unlock the value of an investment which was made a couple of years ago, and when investors have viewed this, they have been very positive as it enhances the overall company's cash reserves and streamlines its overall operations. So this can surely be seen as quite positive, and this overall cash will help BSE to enhance its further investment in the derivative segment on the exchange. So if you see, again we have started giving the all-time highs on the BSE stock. So this long run on the up move can continue further, and we might head towards 2850 levels as primary resistance, and beyond that we might approach towards even 3000 odd levels, which is roughly around 10 to 12% from here on. So the immediate support or resistance for us would be around 2450 or 500 odd levels. If you see a kind of downward movement coming in on in 1 or 2 days, don't consider that as a sell off. Rather it would take support here at these levels and then rebound back for the another highs. So we have crossed this significant channel of around 500 points. Now we are going to trade in this upper channel for maybe another highs until 2800 levels. So be prepared for the long run to come in on BSE only on the bullish trades. Now next up is Chambal fertilizers. So Chambal fertilizers had seen a sharp drop of around 6% on Friday's trading session. So this majorly is because the company had announced the financial results for the fourth quarter fiscal 2025. Though despite the positive headline numbers came in, but it revealed some underlying weakness that had concerned the investors, and that is when there have been offloading that was seen from their end. The company overall reported a 7.4% year-on-year decline in its consolidated revenue from operations, which came in at approximately 2,450 crores. On sequential basis, if we see, the revenue drop was even more drastic at over 50%. So this decline attributed to lower sales volume, which indicated potential demand weakness, and that could ultimately lead to operational challenges as well. So from the higher levels or the all-time highs of around 740 levels, we have been seeing significant pressure which has come on Chambal fertilizers, and ultimately in Friday's trade it had given a significant fall of around 6% and is very close to its previous support of 550 odd levels. Now this support has been tested for multiple times, so which previously acted as a resistance. So this zone, this zone, this, and then from here we touched multiple times, but there was a reversal that came in, and finally there was a breakout with this significant up move. Now since we are approaching that support, that previous resistance which would act as a support now, so in case if this support does not strengthen, or if there is no reversal that we are seeing from here, then be ready that we would start heading towards trading in this below channel in the coming days. So overall, if you see, there have been a sharp selling from the higher levels. So this selling might continue until we approach towards 520 odd levels as the immediate target, and then further below that we might see 500 to 480 levels also. So overall there is a lot of pressure and negativity seen on Chambal fertilizers. So no long trades should be suggested here. In case if you see a significant reversal coming in, only then we can see, but it has to cross this sell off zone. So keep your maybe stop loss, or keep a eye at this particular level around 580 odd levels. When you see a trigger or stock going above 580 levels, only then the long positions should be taken. So keep an alert at 580 levels on the higher side. So on the lower side we might approach even 480 levels in the coming days. So that's it from the perspective of analysis for today. So if you find this analysis valuable, don't forget to hit the like button and share it with your fellow traders. For daily pre-market report updates, make sure to subscribe to our channel and click on the bell icon so that you never miss further episodes from Invesfinc. So thanks for watching, and we will see you in the next video. Till then, happy trading and enjoy your weekend.